market review for the week ended 22nd January 2021. I will tell you that this week again was a mixed and a bearish market driven by what? Profit taking. Profit taking, I say. And I've said on this program, on this platform, that profit taking is part and parcel of what? It's an integral part of equity trading or stock market dynamism. If you really want to benefit from stock market, you must have your investment goal and at the same time have your entry and exit strategy. Yes, speculators will be in the market to provide liquidity, see market going up, but if you are carried away with market gyration, you will be caught in the web. That's why your goal is very important. Your entry strategy is very important, and your exit strategy is very important. What we are seeing in the market, for me, is not something to panic for or to be worried about. It's part and parcel of the work of the stock market investment. Trading in equity. To be a trader, you need to understand all these dynamics in the capital market. That's why also you are an investor. Your knowledge or your insight of all these dynamics will help you when to hold and when to sell. And that is why you will not be carried away by what bandwagon activities. When you see a trend that this trend to be sustainable, you should know when to jump in. When it's not, just set a good goal. Just set a good goal for yourself. Don't be greedy and don't also change yourself, but know the right thing to do. And that is why this forum will continue to preach and continue to teach investors on how to take information and also review the product that will also help them on their own to become better and informed investors. And that is also what has supported our market, is that we have more knowledgeable investors in the market. Yes, looking at the market performance, I will start with the trend. But it's very important to note that for the week under review, I call it a sideways trend. Market is fighting to break out another strong support level. If you look at this region, this candlestick at this level, this is a daily time frame of the chart. You can see here, and market have not broken out here. It tried to do so when the market touched about 41,202, and that is the highest, but it didn't go above that. And look at this. Look at this one on this one. Market touched 41,154 at this point. You see, this is the double top that market formed. After it didn't pull back. Actually, when market formed a double top like this, it said a pullback. But the market continued to side trend. That means market structure has changed, and also the information that or what investors are looking ahead to, where they are facing their eyes, they've not seen it, and they are looking for information that will either support this uptrend to break out at this resistance level we're seeing now, or a pullback. And if you remember, we didn't hold our meeting the previous week. The last one we did, I told you in the discussion that there is what we're expecting, and it's very important that the outcome of the MPC meeting will determine where the market will go. Yes, you see how it played out in the week under review. Everybody was there to take the little profit they have made, which also will preach, if you have made profit, catch out your profit, and look forward to that decision that is coming from, or the outcome that is coming from the MPC meeting. But one thing again, we should know that because the market have rallied in 2020, some of the stocks have given you good return. And this January, we have not seen January effect. Rather, we have seen a positive January. That means market structure has changed, and holding structure of the market has changed. Trading pattern has changed. Don't forget that in the last year, towards the last quarter, it's not because all the stocks were up, but few selected stocks, high caps, pushed the market up. But in this year, if you can look at the pattern from January 4th to date, you have seen that there's another pattern in the market. The low cap stock, the medium cap stock, and dividend paying stock are the one looking up again. And this, when you see the low small cap dominating in Gainer's chart, it tells you that yes, there's an insight of economic recovery again. You see low cap stock. That means people are seeing trade. They are seeing that these stock that are selling low are likely to come up if the economy improves. And that is what, as I said, capital market or equity market, especially stock market, is a leading indicator. that tells you what is happening or what's about to happen in the economy. If you are seeing capital market maintaining this uptrend, actually it's giving you a sign that the economy is also on the recovering path already. Yes, that means we are not going to come out of recession very soon. And if that is not achieved, I'm telling you that it's going to also be a plus for the equity market. That means if you are seeing all this trend, you know the kind of stock we are picking and why we are picking them. And that is why you need to be one of the buy and sell signal so that you know what category of stock to pick for different purpose. That will also guide you, because I told you that your investment goal, enter exit and buying exit is very, very key. You can see for on the daily chart, you see that the market was up for only just a day, and for other days within the week, market was in red. Look at this red. Market continue to resist, breaking down the 41,000 mark of the index. It tells you that there is something for the market. And also, the market still have, on the daily chart, the market still have opportunity to go even above the 45,000 mark of the index. That tells you that there is potential in the market. But the only factor that is keeping the market now is they want to see the outcome of the MPC meeting. But let me tell you, even though there is adjustment in the MPC meeting, it won't last in the market, because the earning season in Nigeria market is this earning season is the most powerful earning season we see, because it comes with what reward form of dividend. And this is the where you see company that had December releasing their numbers, and you have company that had December more on the exchange than every other month. That means this earning season will also be support. And I said that there's a change, in holding structure of the market. The dominant in the market now, according to institutional investor, they are local institutional investor. They have junk of the market, and these people have also long-term fund. On that note, I don't see market just going down, because they also are interested in what, in dividend. That's why they have position. And yes, you can see that in the bond market, there's little adjustment in their yields and other stuff. But we want to see the outcome of the MPC. But also, if you look at the global trend as we speak now, I'll change this into the weekly chart so that we can go into reviewing the week. But I want to show you, that's why I bring out the daily chart. Then, if you look at the global trend now in terms of monetary policy, you see that in different climate of the world, most of the policies from the monetary policy are not now adjusting up their interest rate. All the rates we are seeing, they are all cutting rates. Why are they doing that? It's just to jumpstart the economy from what, from the effect of coronavirus impact, and which you know that the second wave is already threatening a lot of things, despite the vaccine that is being distributed. Only that the vaccine also have boosted some of confidence that it will fasten economic recovery or hasten economic recovery. Why? Because the fear we have in the first round of the coronavirus is not as high as this. That's why we are seeing figures that is mounting here and there. But I'm telling you that with the vaccine, people are more confident to move around anywhere. But you remember in the last one, everybody was in the lockdown here and there. But some countries have also succeeded in injecting their people. It tells that they know what they are doing. For me, let coronavirus not be the issue, but I know it will slow down some economic recovery because of the way. But I believe that with the plans on ground here in Nigeria, yes, the federal government is importing a vaccine for between now and the end of the first quarter, and some will start coming in February. That tells you that we're going to control all this. But for the equity market, if this low interest rate continue after the MPC meeting, market is going to surpass the 45,000. I'm telling you. But if there's a pullback after the meeting, it's an opportunity to enter lower, because it will now bring up the yields of those companies that will pay dividend. Because if you have studied the trend of the quarterly result for 2020, some companies are likely to grow their dividend, lead to just few companies, while others are likely to cut and few will maintain their last year, 2019, their position in terms of dividend payout. But that will still give you good yield. And as I said, the people owning the market now are yield people. These are people that look at yield. They are not looking at even the price, because they are long term. They know that market will always go up and down. But they are long term, investor, because their fund is also long term source of fund. For me, that is what is you see that in the market is changing. The bargain hunting was saying that people are investors are traders are taking advantage of a pullback and the position. That's why you are seeing that before. Seeing that the market is being flat, moving on a sideway, not going up, not going down, even as profit activities is being taken. People pulling up their profits, people have made 20%, 30%, 50% coming out. Fine. But seeing those low cap stocks and seeing all those dividend paying stock and medium cap stock coming up at this point at the beginning of the year is a sign where the market is going. And also don't forget that the news of merger here and there, acquisition here and there is in the market at this early beginning of the year is a plus for our market. For me, investors should not panic, but rather have a good investment strategy and follow analyst or set of analysts you feel that you can chat with to guide you to confirm what you have. That is why those investors that whenever they call, we are open to answer questions and also to give direction, because that is why we are here. Our own is to educate how to make informed decisions and at the same time help you to grow your wealth. This is why we are called Invest Data. That's why we are here at all times to guide and to help you make money. Like I always said, if you are still in loss because you have not taken the right decision, there's no cause for panicking. All you don't need to just wait. The market could or this any season is another period for you to also recover your loss. If you are already in profit, it's order for you to make more profit. This market in 2021, yes, I said at the beginning, it's a mixed market, a dicey market, but there's still opportunity. I see that between now and end of April, the market remained this trend because of the big factor, the earnings season is what seeing the third quarter. And also, if you look at the first result that was that just break out or call it that usher in the earnings season, and it's the first one, Unilever, that came. If you look at Unilever result that came, you see that result for me is a missed number, but an improvement in what they have done in 2019. That means that gradually you can see that they reduced their loss from almost 4 billion to about 1 point something billion. It's an improvement. Even if you look at their last quarter of 2020, see they are already in profit. It gives you sign where Unilever is going and what is going to come out from that sector. For me, investors should not panic. Let us look on to the MPC meeting outcome. But like I said, looking at the trend in the world, they're talking about the only fear I have, and there's a concern for the MPC, is that the inflation is moving faster. And that rising inflation is a threat to everybody, both the investors, both the consumers, both income earners. But yes, we can hedge against inflation if I'm a trader or investor going to equity that has a yield that's more than that, or even close to that, to protect your fund, fine. But for the general economy, when you see rising inflation, it's a threat. And that's what we're looking at. It might not prompt the monetary to say adjustment. But for me, they've not achieved the target of the low interest rate we're seeing, is to bring the economy out of recession and set the economy for growth, expansion. If for the month of December we're still under 50 point of purchasing index manager, it does mean that yes, the output of the industrial is still low. Then if you want to drive that, you need to have cheaper fund in the economy to drive it. That is another thing. But I think they should leave for them to leave it for them to see what they're going to vote for. I believe that they are all economists, they are all professionals that are going to do the voting. Let's see. For me, I would have loved them to leave the rate till end of the first quarter of this year to see how it come. Then also we expect to see the last quarter 2020 GDP. That would have given them more insight. But if before the MPC on Monday that we can get the GDP figure today, fine. So that we also will assist them to know what to do if that were the out of recession in the last quarter 2020, or the contraction is we are making a progress of coming out, because I told you that, and you also know that we had a dip of almost a 6.10 before we now move to 3.62. If we are coming out or we're having a 0 point something negative for fourth quarter, it's not a means in the end of first quarter 2021 we should be out of recession. For me, you need to keep your eyes on the market data and economic data because they work together. And also, as liquidity level in the market remain high for now, but because of what the low interest rate and also yield in other investment window, it has been a plus to the market. But don't forget that if you are followed up, we said there are two major factors that drive our market: low interest rate and oil price. And oil price continue to move up. As at close of business on Friday, oil price is doing about 55.75. The OPEC oil, I tell you that is above our benchmark for 2020 budget that is extended to March this year, which I've said earlier, and even for 2021. That means yes, it's already a plus for us because we're having excess. Our benchmark is around 40, 45. Now we're getting around 57. It's a plus for us for as a nation. That is how I see. For me, this is not a time to panic, but take investment decision and invest the right equity. Yes, before we go further, I want to give you the market data for the week. The all share index for the week opened at 41,176.14 and closed at 41,001.99. You see, market was present to resist decline. Within the week, market was trying to start trading, but now at the end of the day, market just lost 0.42%, representing like 174.15 point decline. That means in percentage time is 0.42. That means it's less than 1, which is so called good for the market. Why the market cap was also was also market cap was a bit also down for the period, losing 0.38% for the week to close at 21.45 trillion for the period. But the good thing is that the market breadth, which is very important, the market breadth was positive. How about 58 stocks on the up direction on the gainers chart on the side of the advanced 53 stocks, 53 stocks on the gainers chart, while you have just 29 at the loser chart for the week. Is a sign that this low cap stock that dominated during the week, and also there was a high volume traded during the week. It tells you that there's activities, people were taking profits, people are taking position. This activity tells you that yes, the market might start to bounce back next week after the MPC meeting, depending on the direction. For me, I still see a strong market. I've not seen a negative sign, looking at the chart. Yes, the stocks that are really on the bullish base, that just reducing small, but that is not a sign of a negative sign for now. But I still see that the market is still healthy and strong to move, especially as we're expecting in the earnings season. Yes, people say that people said that because they factor in earnings season. I agree with you, but if you look at, there are some stocks in this market that are still having above 10% yield. If you look at stocks like Police Microfinance, as we speak, is the yield is above 10%. There are many of them in the market that are above 10%, so that you should look at those stocks that will give you a good yield, and also that will attract fund when the result hit the market. Because I said it, if you have not gotten the March earnings season, you need to get that video. It will tell you how to use any season to create money every quarter of the year. And every now that we are seeing, expecting anything for full year 2020, you can easily jump position and know where to be, because it will guide you kind of stock you should look at. The kind of stock you should look at for this period. And this is how to invest. There are a lot of them that are above above 10% yield. And also don't forget the entering style using a date to buy. I call it investing with date and what and numbers. Looking at when will this company release the result, you see that the market Unilever have surprised us already with their full year result for 2020. Then who are the other stock that is coming following suit in the month of February? You need to get to those stock, but I will share the data during the question and answer to know those stocks that are there, where you should expect the result to hit the market. Exactly when you know that, it's going to go a long way also to help you to know when to position. For those that were mentioned earlier, we expect CAP to be there earlier in February. We expect Zenith Bank to be earlier in February. We expect Nigeria Brewery, Nestle. But you can see that because there's little improvement in Unilever, you can see that the results came early. I told you that when a child has done well in school, when the dad is running at the gate, he will be the first to call. When your number is it's a sign of favor, you want to showcase it. You can see, but others will expect that Unilever result is not a bad one. We have seen it, but that of UCAP2, because of the performance we have seen so far, it's not. We expect a good result from them. If possible, I see possibility that they will retain their 50 kobo, or they can pay something above it. But if they pay their 50 kobo dividend they did in 2019, that will also be a plus for the price to go up. Like we forecasted that this price should be above 6 naira 10 kobo or 620. If you have opportunity to buy that stock around 5 naira now, it's not bad for you to position in such stock. You need to tutor that stock that we know that dividend yield is high and they are consistent in dividend payment. Stock like Zenith Bank, you look at these stocks for that you know exactly where to be. But for those in buy and sell signal, they know already because they are already there when they log in. Also, if you're not a subscriber, this is time for you to take advantage of the research team, what we are doing, to know stock to buy and stock to what to sell and stock to hold. You can see what happened in Wako, and Wako still have potential. Let's leave it for those in buy and sell signal. They will still hear more. And during the the question and answer, we'll still also discuss more on these stocks, but you need to subscribe to Buy and Sell Signal and get also you also up your knowledge in investment. All those are our materials like the Mastering Earning Season, Profitable Stock, Replay of and 10 Golden Stock. Actually, the 10 Golden Stock, I will tell you that this year 10 Golden Stock is 90 days, said 150 days to achieve a target. I will tell you in less than 40 days, most of the target have been surpassed. That means you, as an investor, you still have opportunity to get those 10 golden stock and position. And also not only the position, use it to look at your portfolio. Is this well structured? That will also go a long way to help you. On this note, we draw the curtain here to say have a good trading week. At the same time, this is a new year. Let your investment go, entry strategy, and what strategy guide you. If you don't know all this, get the old study back and you get knowledge on how to invest wisely. See you and God bless.